रुचि, मैंने कुणाल को भी बुलाया है, इवन इफ देयर आर सम टेक्निकल क्वेश्चंस, तो उनको
Technical.
उसको बीच में पुल कर सकते हैं क्या?
No, I've sent him a speaker link already.
ओके, ठीक है।
All right. I think we should get started. Rishi, are you okay with us starting right now?
Sure.
All right. Hello, a very warm welcome to everybody for the first Pragati session of this financial year. Hope it was a successful one for all of y'all. Today's topic is role of loan service providers in the account aggregator ecosystem. LSPs, of course, are an integral part of the lending ecosystem, and account aggregator being an enabler for the lending industry, and of course, credit as such being the biggest use case of account aggregator today. It was but natural that we got a lot of queries around how LSPs can be a part of the AA ecosystem. Uh, we have over the course of so many months or years have been inundated with questions around this topic, and now with ONDC also implementing the framework, the inquisitiveness has increased. People want to know information around the modalities, the processes, the front end, the back end, all of this. And we thought, what better way to do it than to have one session where we can answer all the questions that we have been asked over the past so many months, and also probably take more from the audience. And who better than Hrushikesh Mehta to open this session and set the context for us? Hrushikesh is a very well-known person within our industry. And for those who do not know and do not follow him on LinkedIn as yet, Hrushikesh is the Senior Vice President of ONDC. He comes with immense knowledge and experience within the financial industry across the spectrum, starting from front end, then product, then business and back end to end completely. Within ONDC, of course, he's involved in creating awareness and adoption of implementation of the standard APIs, which is the Open Credit Enablement Network to create or facilitate digital lending. So, of course, we couldn't have thanked you more, Rishi, for taking time out and giving your a bit of your experience and your wisdom around how LSPs can very successfully be a part of the AA ecosystem, and if there is anything more for you to add. So I'll put off my video, Rishi, and over to you now. Thanks a lot.
Thanks for the kind words, Ruchi, and thanks for having me here. So I've worked with the Sahamati team very closely over the last 3.5, 4 years, and I think what we'll try to do in the next 15 minutes is I want to give you a flavor of how we got here for those who don't have context, and why we believe this next year is going to be an inflection point both for open networks and services like credit, insurance, investments, and also for the account aggregator ecosystem, and especially what it means for the LSPs, because they form the very important half of this open network system, where one side is the LSP or the buy side that drives demand, and the other side is the manufacturing side that drives the actual product that is delivered to the customers. Now, look, this journey has started almost 10, 12 years ago for people who worked hard at this long before us. Everyone knows the story of Aadhaar, of UPI, NPCI creating the e-NACH, the e-mandate, we having DigiLocker for documents for KYC, e-sign to sign documents. So this has been a long journey, and then finally we have all the Lego blocks in place. The one missing piece, right? Whether it was cheap payments, being able to do KYC, having digitally sound documents that can be shared in an instant, was the ability to have high provenance data that can be delivered at a click of a button. Now, typically, I mean, when we applied for a loan previously, and I take you back more than 7 or 8 years ago, we had to submit documents, whether it's bank statements, whether it's income tax returns, salary slips, all this good stuff, because what it was is a proxy for data. And I think what Account Aggregator's done, it went live, I think in September 2021, if I remember correctly, publicly, and has grown leaps and bounds since then, has created the ability, just like we transfer money with, one OTP and a debit card pin and a telephone number. You get an OTP, you create a consent handle, and you're able to transfer data. And this is very well trusted by the lending ecosystem, and it's standardized as well. So that's a huge benefit, and I'm going to describe to you why that is, and in the context of how we use it in ONDC, and why this is so material for LSPs, and now that the opportunity is there to leverage it. Right now, so just for a moment to move to ONDC before we come back to Account Aggregator, which already has bank statements, has SEBI depository data, also has GST data. So there's already a wealth of data available there. Now on ONDC, what are we trying to do, right? We're trying to create an open network where we onboard lenders on one end, we onboard LSPs or buyer apps in our parlance on the other end. And this becomes sort of, standard rails for demand and supply aggregation. So you don't have to do custom integrations with either the lenders or the LSPs, if the lender sitting on the other side, which is also a stated problem. The second major problem, is that today lenders have to prioritize which LSPs they deal with, because what happens is if, it's an Amazon Pay or a Google Pay versus contracting with the five guy, a startup with 5 guys in a laptop, the larger lenders are naturally going to choose the larger players because there's an investment in resources that they have to make to integrate. What has happened with the standard rails is that these lenders become available to everyone. So even if you're a startup, you can plug into the open network rails and then become available to the lenders and vice versa. So that's a massive plus. Now, how does Account Aggregator fit in, right? So we have launched credit on ONDC. So we have only one buyer app live. The name of the buyer app is EasyPay. 2 lenders in DMI Finance and Aditya Birla Finance. But coming soon, we've got Paisa Bazaar. And I mean, when I say coming soon, in the next week or 10 days, there's Startup Digital, Pay Nearby, another small startup called Clinique 360, India Lens, and there's a laundry list. In this year, we plan to onboard almost 10 or 15 LSPs. And I'm not sure if you guys are already on that journey, but if you're not, you're welcome to come. And we'll be doing similarly with about 10 to 15 lenders, which is a cross-section both of large banks, private banks, public sector banks, NBFCs, including the likes of Tata Capital, Kotak, HDFC Bank, SBI, Federal Bank, and so on, right? So there's a whole bunch of lenders coming as well. Now, what has been our experience and what is the flow that we have implemented at ONDC? The first step, so actually before we even get to the flow, let me talk a little bit about the kind of products we're doing. So what we've decided to do is build a product flow for the most underserved, right? So unsecured loans for MSME credit, for consumer finance. So we've started with unsecured loans. We're also doing what we call an alternative or derived data product called GST invoice financing, where there are cash flow-based loans given against individual invoices. We're also doing additional use cases with particular LSPs. So like with Stellabs, we're doing a dairy cow financing use case. With Bizom, we're doing a supply chain finance use case. And with Absolute, they have crop yield data, so agri financing. So for example, if you have transaction data on your LSP, you can also do those sort of use cases. And then consumer finance will be coming soon as well. Now, why is Account Aggregator so important in this, right? So I'm going to give you, so we have launched personal loans. It's very small at the moment. We just piloted a few weeks ago, 1,000 applications, about 20 loans disbursed, average ticket size 44,000, give or take. And these are all self-employed customers, not salaried customers. And what is the flow, right? So someone applies for a loan. they are redirected just like you're getting, so we actually provide them an option to select multiple account aggregators. Currently, just FinView is live, but OneMoney is on its way, and I believe other account aggregators are also interested. So, we are happy to have as many account aggregators on each LSP to give adequate coverage of all the lenders, for who the customers bank with. So the account aggregator is the next step. It's almost the second step in the journey, because the whole journey takes just 6.5 minutes, and the person creates their handle, links their accounts, sends the OTP, and there's a multi-consent share. So one OTP and multiple sets of data that have been consented to us sent to the lenders, post which they come back with an offer and then go through KYC, dispersal account collection, setting up the repayment, then finally signing the agreement. And some lenders are also using the monitoring consent. Now, why is this such a seminal moment? I think both for ONDC and account aggregator. So number one, I think ONDC plays the role of stitching together all these public goods that have come together over the last 10 years to finally be able to deliver credit to the end user. And this whole journey that I described takes just 6.5 minutes. You can actually have a look at this journey. It's up on our website at ondc.org in the resources section, where there's a financial services subsection. Now, the other benefits of this, right, other than the very smooth flow, everything working very well, 6.5 minutes to sanction, and if the lender's equipped in another few minutes can disperse the loan in 10 minutes. The other really, really useful thing about this is what this has as an impact on lenders as well, and as LSPs as your own business, right? Now, some of you must be running call centers, and I'll just be candid. I've run a marketplace in the past, and what we always found is the bounties that we make from loans are not always enough to cover the reams of people that you need to hire when you're doing the telecalling, when you're guiding people, sending people for document collection and verification and that sort of thing. So what we have learned actually from two lenders, which when they piloted their direct to lender flows earlier last year, is that one is they saw much higher throughput, right? So almost a 30% increase in throughput, because it was just easy to apply. I didn't have to go print my bank statements, take them to the bank, get them stamped, then still worry that the lender will check them for fraud. So there's a lot of manual processing going on. So it was much easier. So 30% increase in uptake. Second, there was fraud rates fell to zero because of tampered bank statements, because they were coming digitally signed straight from the source. And that is a huge saving for the lender, and a huge validation and increase in credibility even for the person originating the lead. And then finally, the third thing was a 65% reduction in processing costs, right? I mean, it's kind of obvious if you have a digital journey, it removes the manual effort and hence a reduction in costs. So what happens is that actually makes you profitable at a unit level. I mean, everyone might have different economics, but the implementation of this, even for half your journeys, if you're able to do it successfully, it's a substantial reduction in costs. And I think this makes being an LSP a really, really lucrative business going forward, where it may not have been in the past when there's a lot of manual work involved. So look, we have a strong pipeline. We're very optimistic of what is going to come in the future. I'm sure the account aggregator and the Sahamati team will work more and more, not only to optimize the current experience, implementing a commercial model, getting more data sets involved that make it even more useful over time for underwriting. So I think, like in digital public goods, the hardest part of predicting when things are going to take shape. I almost envy all of you all now who are LSPs and lenders and account aggregators, because after a very, very long wait, I think this work on account aggregator has been going on since like 2016 or 17. And the advent of ONDC about a couple of years ago, and then us bringing financial services last year, I think all the stars have sort of aligned, where in the next year or 18 months, you're going to see the inflection point where things are going to actually blow up, right? And it's a cliched thing to say, but that UPI moment, that everyone compares it to. But I genuinely, like, if you had asked me this maybe a year or 2 years ago, it would have been very difficult to predict when this was going to take off. But I think we are now at that point where not only is there, political will from the government, we have the organization set up to help support this drive. We have various account aggregators in the market. We have green shoots in terms of this already working for multiple places. We've already got this live on ONDC. What is left is just for more people to adopt it, and it will really scale as it gets more efficient over time. So look, I'm going to stop there. I know a lot of you already probably knew a lot of this, but the time to start building is now. The opportunity to embed a multi-consent flow for your users into your flow is already available. The standard rails are available. So if you want to reach out and start building, you're welcome to. I'm sure the Sahamati team will guide you on how you can do AA on LSPs as well. We are here to help you as well. So I'll just stop there, Ruchi, and I mean, I'm around if you want to, after your presentation, I'm happy to take questions as well.
Thank you so much, Rushi. That was really, really helpful. And, I'm sure there are a lot of anecdotes for people to pick up from what you just said in the last 10, 15 minutes. Very, very helpful in how to go about the implementation, and also, in a way, a proof of concept that is lying with, this little pilot that you all have done. What is the plan for you all to get more LSPs onto the framework? So thank you so much, Rishi. And yes, it would be good if you can be around just in case anybody has any questions. I now hand over to my colleague Abhishek. He is going to run us through a little detailed presentation on role of LSPs and implementation for LSPs, the account aggregator implementation for LSPs. So over to you, Abhishek. I'll just hide my video.
Hi all. Welcome today. And I think Rishi, as Rishi mentioned, that we have also came across some of the case studies which says that there is around 70% decrease in the overall processing of cost per file, and it has a huge impact when you talk about, especially in terms of small ticket size loans. And obviously, fraud getting to nil is something which is a very big use case which has come up because you are directly getting data from the source. So I've divided the presentation into majorly three parts. First is I just give you a run through the latest numbers and what is the status of the ecosystem right now until March end. And then we'll talk about LSP, what is the role of LSP, and few question and answer which we have already received, few queries which we have received, and we'll give you answer, run you through those. The current state, we are seeing a month-on-month growth rate of 22%. Overall, 63.95 successful cumulative consent has been shared, and there are around 212 crore financial account which can be enabled and or which has the facility of A, or you can link these accounts to your account aggregator handle. Talking about the coverage in terms of FIP and FIU, there are 148 FIPs in the ecosystem live right now, wherein you will have access to around 15 different FI types. You can have different types of FI types, which is mentioned on the right side. We see a good coverage of public sector banks are covered. All of them are onboarded on AA. In terms of life insurance and health insurance and non-life insurance, we will see the coverage increasing soon. GSTN has went live. One of the update which I wanted to give to you, that one of the feedback which we got from the market participants of a system was that in the initial implementation there was a delay of 15 minutes. So maximum time which you can expect to get data from GSTN as a FIP was 15 minutes. GSTN has now reduced it to 5 minutes. So maximum time to get data from GSTN would be 5 minutes. So you can expect data even in 1 or 2 minutes also, or maybe less than that. On FIU coverage, we know that NBFCs and HFCs are one of the major users of this ecosystem. 81% of the use cases come from lending. But we are seeing adoption in terms of other entities picking up, like SEBI regulated entities where RIA licenses are there, or stockbrokers using the framework quite efficiently. And also insurance market is we are seeing during our interaction, we are seeing new use cases coming specifically for insurance use cases. So those use cases will pick up soon. These are the some of the numbers which we have recently collected. So in all, cumulative loan disbursed through via A is around 42,000 crores, which is 423 billion, and around 4.23 million cumulative loans has been disbursed. So these are the number of loans which has been given via A. Just note here that the H2 data which you can see here is the data which we have got from the FIUs, who contribute to around 60% of the total successful consent fulfilled. So we will revise this data as soon we get the data from other FIUs also. But these numbers are very motivating, and if you see, compare it to the last, maybe if we can compare the half yearly numbers, that too there is a drastic improvement which we are seeing. So hence, adoption across different FIUs have increased. Maybe initially they were live in the pilot with 1 or 2 journeys, but now they have expanded the scope. Also, the scope has increased from one-time consent to recurring consent. So hence, maybe we are seeing greater adoption here. The average ticket size and loan disbursed across different products. So we see a uptake in terms of average ticket size for business loans and home loans or LAP, which was initially business loan was at 9 lakh. Now it is around touching towards 13 lakhs. Home loan is at average ticket size is 39, 40 lakhs. With GST settling up, we will see that more of small ticket size loan was financing loans will come up. So we are expecting that we will have a reduction in the average ticket size in coming days. Coming to the topic for today, which is role of LSP in any ecosystem. So just to give a context what LSP is, it is any customer facing app or a platform, which can be a web app or Android app, which has a core offering, some product offering, and it has a good customer base. But now they want to enable lending via LSP framework, and hence these are all apps becomes LSP in the ecosystem. What role LSP plays is it becomes an agent of the FIU and work on its behalf of one or multiple lenders on the other side, because we may have one-on-one integration with one LSP, one lender, but there can be implementation where, like Rishi said, that they are live with two lenders, so it can be one to many also. The types of LSP which are in current market present are these are credit marketplaces, lead generators, or FLDG partners, where more than one services of lending journey has been outsourced to the LSP. Reference implementation, whichever live and which have been into discussions, like ONDC went live with the financial services, GEM Sahay was the first implementation, and GST Sahay is underway. One of the questions which we have got and asked frequently is what has changed when LSP comes into picture as compared to the normal flow which is there. So just taking you through how the flow looks like. So when the customer applies for the loan on an LSP, so LSP takes initial document or whatever data it collects, and at the time of getting the financial data, if they have integrated account aggregator, so between the time when actual redirection happens and the time when the customer actually clicks the chooses account aggregator, there is a back and forth of APIs which is happening, wherein the LSP actually requests the FIU to raise consent request. This request FIU forwards to the AA, and in return it gets consent handle IDs. These handle IDs are shared with LSPs. So in the case of multiple lenders, the LSP will receive multiple consent IDs. Now, at the time of redirection, all the consent handle ID which LSP has received, plus the reference VOA ID given by A, and the redirection link, which points to the location where the customer will be migrated after a successful consent has been given. All these are encrypted by the LSP and the redirection happens. So to answer what changes, majorly there are three changes actually. So one is in LSP flow, the redirection happens via LSP. The LSP is responsible for encryption, whereas in FIU flow, where FIU and AAs are linked, the FIU does the encryption. The third one is if there are multiple lenders involved, we will have multi-lender consent in the AA flow. So I have some screens which for reference that will be very useful for you. So we'll take it up later in the presentation. So many a times we have been also asked about will the data from the account aggregator which is sent to the FIUs will be shared with the LSP or not. So if you see the flow, the only the at the end the offer is being shared by via LSP, and no other data actually gets transferred between LSP and FIU. So this ecosystem remains between the regulated entity only. These are the other questions which we have got. And so does an LSP needs to get into agreement with AA? So the legal term should govern the relationship between AAs and LSP. This is how we see. But right now, since the ecosystem is at this LSP and AA specifically interaction is at a very nascent stage. So no agreement is there, what we have heard of. And is there a commercial arrangement between AA and LSP? So there right now no commercial agreement arrangement has been there, but LSP and AA add value to both each other. From a LSP perspective, LSP gives access to a lot of a lot of customer base to AA, so AA has an opportunity of getting more customer acquisition of new handles. Whereas in terms of when AA can also say that this is a they provide a seamless interface for data sharing, so it is also providing a convenience to LSP. So this is these commercial arrangements are evolving, and there will be times when the ecosystem matures or these interactions or these arrangements matures, we will see more clarity on these terms. So there is another doubt between people that can multi-lender consent be captured on a single customer action? So yes, it can be captured, but all the consents uh, particular to each lender should be uh, seen explicitly. Like I'll show you the screens, and the customer can actually select and deselect which lender he wants to choose. So in this journey, there were two lenders involved. One was Prayoga NBFC, and the other one was CredRight. So once the customer has actually started the AA journey, now they can actually on the single screen, these two consents can be shown one above the other, and the customer can actually select all with this link, or it can specifically choose one of the lender to which he want to give consent to, and then the data can actually be sent to that particular consent to that particular lender, and he can accept the consent. So this was all the points which we wanted to cover, and we have got feedback. Maybe we will now open up for question and answers if anybody, or maybe Shalini, and if you want to pitch in for something if I have missed. Or otherwise we can open up for question and answer specific to this presentation.
No, thanks, Abhishek. I think we can just take questions from the audience.
We have one question that has come from Mayank. It's in the question box. It says, what about license part of LSP?
So LSP in this framework is a non-regulated entity. Mayank, if you can just clarify the question, we can be able to answer it more accurately.
There is another question called, are there any changes at AA end for this?
Guys, I can take the LSP question, if I understand it correctly. Like, the LSP doesn't have to be licensed because there's no data shared with the LSP from the AA flow. It only goes to the regulated entities. So all you're doing is a redirection flow, and then you're redirected back. Just think about how you use a payment gateway. So nothing changes for the LSP other than embedding the AA flow. Does that clarify, Mayank? I guess no answer from Mayank, assuming it does.
It is.
Yeah. Yeah, because probably it's disabled for him talking on this thing. It's a webinar session, right? So I'll just allow the Hrushikesh Gore to ask the question. If you, Hrushikesh, you had raised your hand, you want to ask? Hrushikesh? Okay. I think there are more questions in the Q&A box.
Yes.
There is Ranjit who's asking, are there any changes at AA end for this?
So yes, small changes are required here. Maybe Kunal, if you're there, you can correct me, my understanding. But one of the changes, multi-lender consent, which will be implemented. Like if there are 2, 3 lenders which are associated with that particular LSP, this consent scheme will change. Also, for any LSP which wants to use this framework, there is a LSP ID which is generated by unique ID which is generated by the AA specific. So you have to take that ID from the AA and that goes in their records, which so that they can identify that particular ID. And also the AA should enable that the redirection. So AA will actually share the encryption key with LSP, so that when the redirection happens, that can the data packet can be, or the specifically all the consent handles and VOA IDs can be encrypted and shared in a secure manner, and the redirection can be successful.
So let me just clarify on this. In terms of changes at the at the LSPs and the AAs end, it's the activity of integration, which involves creating of a shared secret for encryption of redirection parameters and only the integration of embedding of the redirection links. That's all that's required. Other than that, things like supporting multiple consents is something that most AA clients offer by default. In case they don't, then you might have to uh, discuss with them. But most AA clients right now offer it by default that if you are passing multiple consent handles in the redirection parameters, then they will open up multiple consent handles and show them to the customer. I hope this answers your question.
I guess, Kunal, if it doesn't, then they'll ask the question again.
Okay.
Just a moment, I'll just, so Hrushikesh is not unmuting himself. I'll just ask Devesh, you can unmute yourself and ask the question if you want to. Devesh Kurani.
Hi, can you hear me?
Yes, we can.
Yeah. So in a way, what I understand is that LSP in this case is acting as a TSP. So if an RE wish to, let's say, outsource his services apart from an LSP to any third-party service provider, then technically that particular fintech entity also can perform the same activity which is currently LSP is performing, since either of them won't have access to data. Am I right to understand this?
So Devesh, can you just repeat your question once?
Yeah, sure. So what I'm saying is, in this case, since LSP technically is not a regulated entity and won't have access to data, ideally LSP is acting as a TSP only, like a technical service provider, right? Like an RE can appoint any third party, an outsourced service provider for such services just to integrate and help them in the technology. But
No, so I understand the question, Shalini, can I answer?
Okay. Yeah, Rishi.
See, Devesh, you're right. Anyone can be a TSP. So you can be an LSP, but also be a TSP. But the LSP is very clear. You're originating a loan. Now, if you want to sign up with a lender and they want them to build whatever technology integrations that they want on their behalf, obviously you can do that. But I would not mix the two. It might be being done from the same entity, but don't like confuse your understanding of the two. And then there's an additional piece where if the lender wants to sign a principal agent agreement with you and ask you to do collections and all, that's again one level even deeper. So the LSP, the way we formulated it, is usually a lead generator
okay.
that manages the whole flow. A technology service provider can help the lender build technology, help the LSP build technology, both. And then there's you acting on behalf of either of the parties or especially the regulated entity. So that's the 3 ways I would think about it. Does that answer your question?
Yeah, that's thanks.
Okay. We have some more questions in the Q&A box. The next one is, can LSP get data for offer generation?
I mean, the short answer is unless you're a regulated entity, no.
Yeah.
So Okay, there is a question from Satyajit Mohanty. He says, Sir, can we onboard in blockchain fintech companies wherein we can share the data analytics to them from the AA after analyzing the statement rather than the complete report?
Look, can I take that?
Yes, sir.
See, look, once the regulated entity has the data, the regulated entity can choose to hire whoever they want in terms of analytics, what output they want, everything. So we are not the arbiters of telling you what the regulated entity can and can't do. So, I mean, the answer is yes, but it's based on the services you're providing it to the regulated entity, and that's beyond our purview.
Yeah, and
Shalini,
that's
anything to
beyond
add?
the account aggregator framework. To add to that, what Rishi is saying, it's something which will be governed by your outsourcing arrangements with different vendors for different services. So REs are governed by outsourcing guidelines from RBI, and that is what will govern this relationship also, and that's how it can be worked out.
Okay. Vishal Kumar, you have raised your hand. You can unmute yourself to ask a question.
So the question from us is, so there are, we understand that there is a invoice based. However, we would like to know that can this the whole LSP can create it for other financial instrument, like let's say trade finance related, where mid-sized corporates come into picture from more import export related thing, and how the data which is beyond just a bank statement can be shared between account aggregator and
Can you also
and the,
specify who you're asking the question to so that it will become easier for us to respond?
so I'm asking from both Sahamati and ONDC both perspective, like if I need to put a solution from trade finance perspective.
Yeah. Okay,
and
I understand your question. So let me take the first, then I'll hand over to the Sahamati folk. See, so we have implemented for individuals and sole proprietors. So you can do trade finance even today. Because like the GST invoice financing product is exactly that for sole proprietors. We are working on a B2B credit flow. We'll have that out in 6 months. I think another 2 months, you'll have the protocol, another 4, 5 months after, 2, 3 months after that, we should be live. The issue with that is, and Shalini and team can correct me if I'm wrong, but the issue with that is when it's a partnership or private limited firm, we don't have a way to take consent yet. So that is an open point. There is work going on with the powers that be, which includes the Ministry of Finance and DFS, but I'll let the Sahamati folks speak with that. So short answer is yes, that is coming soon, and I'll hand over to the Sahamati folk to answer when the partnership private limited or joint account consent is coming.
Yeah, so yeah, Rishi, I'll take that up. So basically on the partnership and non-sole current accounts, there is a legal approach that has to be worked out in terms of, given that there are multiple holders and stakeholders in that same account, how do you get consent from each one of them? And there is some work which is happening with IBA and even the other ecosystem participants, but as of now, there is no solution that has come out. But we do target to work on it over the next few months and come up with a solution for that. And on the second question on, multiple FI types through account aggregator, right? That was the second question. There very clearly, once you do one implementation of account aggregator, what will, so if there are multiple FI types and they are enabled on AA, it is only a matter of changing the data packet that is flowing through those APIs. So the data packet changes, your implementation remains the same, and there is no additional work which you as a FIU need to do other than, making changes to your BREs to consume that data. So one implementation of account aggregator is sufficient for all FI types, and there is no additional work required, if that is what your question was.
Yeah, Shalini, just one thing. Thanks for the answer, Rishikesh and Shalini. So the one thing is, do we have the schema for the whole end-to-end data itself?
Schema
The
for
corporate data schema which getting shared between the account aggregator and the finance provider.
Yeah, it
the
should be
schemas
published on
have
the
been
site.
all released for all FI types, and even for corporate accounts. the schema will be same as that for non-sole accounts. So there's no change in the schema. Schema is all there, approved, put live by Rabbit. The only thing is we need to agree on a approach to get a consent from on accounts where there are multiple owners involved. So that is the only piece left. If there's an approach that gets agreed upon, the schema is all approved and live for all types of deposits. Does that answer your question, Vishal?
Yeah, I think we can discuss, because we are not able to find the detailed schema from the corporate perspective, what we are looking for. That's why I had asked this question.
Yeah. So if you think that the schema which is currently there for deposits from a corporate side, it doesn't like cover all the elements that are required, that's a discussion which we can have separately, and we can take in your feedback and see if some additional work is required there.
Thank you.
Okay. There is another question. It says, what is the reasoning behind having an agreement between the AA and the LSP, given that the agent relationship is between AA and FIU, stroke LSP dash FIU? Okay.
Yeah, sure. So like Abhishek said, that there is thinking which needs to get evolved on this. So one way of looking at it is that given that FIU and A are already in a relationship and within the agreement, if the FIU can authorize the account aggregator and entrust them, like, with the task of building interfaces on their LSP partners, we may not need a separate agreement. But then the counter view to that is, given that LSP is still a third party, and would it be all kosher by regulators if you work with a third party without any direct contract with the LSP partner? So we'll need to see how it evolves, and we are also doing some thinking on it. We'll also speak with the ONDC team and we'll come out with a clear answer to this question.
Devesh, do you still have a question? Then you can unmute yourself. Your hand is there.
No, sorry, sir.
Okay. Shiva Prasad, you have a question. If yes, then please unmute yourself.
Yeah, I think it goes back. Hi, Rishi and Shalini. It goes back to the previous question. Does specifically from an ONDC standpoint, let's say we are a network participant on ONDC and we have a distribution network of entities on the platform, and there are enough merchants. Does an LSP have to have a separate agreement with each lender participating in that ecosystem for originating?
No, so I'm going to give you a slightly more complicated answer to this because of how this is evolving. So we have so if you're already participating on ONDC, we have that network participation agreement.
Correct.
We also have static terms for the particular category. So for credit, there are different static terms than there would be for e-commerce or retail or whatever. So those are up on our website. You can have a look at those, or just write to me at fs@ondc.org and I'll get someone to send them to you. Now, to the question of whether these are okay as a standard agreement. So we have taken feedback from lenders and expanded the transaction level contract in terms of coverage and alignment with the digital lending guidelines. However, we've also been requested by the lenders to take this to RBI so that we can get it blessed, which I don't think RBI is not going to bless it, but I said, okay, don't bless it, but at least say that you have just point out objections if you have any. If there are no objections, we know we are okay. That is an ongoing process. So in the meantime, some lenders whose legals and compliance are not comfortable with just the standard agreement, they are signing bilaterals. The ones who are comfortable are going with the standard.
Brilliant.
Does that answer your question?
Yeah. I think that makes a lot of sense. And again, with the blessings of RBI, I think if it meets some form of the digital lending guidelines, if that's okay as a relationship between.
No, we are compliant. The issue is, I mean, to be honest, they said they will not bless it. I asked. So,
right.
so they said, I said, okay, don't bless it, but at least object if there's something wrong.
Yeah.
So they said, okay, that we'll review. So we have to just put together that packet over the next few weeks, month, or as soon as we get the large lenders to align, and we'll be taking it to them to present.
Sure. Sounds good. Thanks, Hrushikesh. Thank you.
See, just to give you a little more context from this legal perspective, the clear feedback from everyone is if we are able to standardize this, it will scale the whole ecosystem. So that is the effort.
Absolutely. Absolutely. Thanks.
There's another question from Deepak Raj. He says, are there any AA who have already enabled support for LSPs, or is it still in implementation
FinView is
phase?
live, and OneMoney is on its way. And I'm not close enough to the implementation. But like what I've told the team is each LSP should at least have 2 account aggregators so that we get a clear view of who's operating most efficiently and a benchmark. And look, there's one question in the question bank that asks what are the drop rates and all. Now I don't remember them off the top of my head, but in some cases they're quite high also. But that is also because of the segment of customers. And when I say high, it was like 30, 40%, 50% before they went to consent. And there's a reason I'm saying this. So there's the technical failure, which we are working with the Sahamati team and the FIU to fix. And look, this is par for the course. When we launched and I come from Sibyl. I was there when Sibyl launched in 2004. These are the same issues we saw then. It was still useful. And then now you can't think of giving a loan without pulling a credit report. Account aggregators on the same journey. So I'm not particularly worried about that. What is worrying as an industry, I don't think there's enough education for consumers about what an account aggregator is. And I think we all need to play our part. In fact, I mean, we are also now, I've reached out to a couple of reporters and I'll say, I'm going to put some articles in the press talking about what an account aggregator is, and you shouldn't feel afraid of it, and it's RBI regulated and it only within regulated entities, etc. I would encourage all of you to use your PR machinery, talk about it wherever you can, get it in front of the customer. I would also encourage you to do a lot of education material on your websites and your user flows. Because and I say this, I'm not pointing fingers at anyone. I say this as a collective, we're not doing enough. So my request is to do more education. Otherwise, it'll become part of like our lives sooner or later. We just rather it be sooner.
Yeah, and in fact, Rishi, to add to that, we do plan to come out with some industry level, awareness campaigns where the collective together with the support of the participants can launch some, videos and reading material and all of that as standard.
Shari, the thing is, I'm pushing everyone. I understand Sahamati will do its bit. But look, whether it's the account aggregators themselves, it's the LSPs, it's the lenders, everyone uses this, everyone benefits when this starting to scale. And look, we don't benefit. Yeah, we work for non-profits, it just works. So help us help you.
Valid point, yeah.
So someone, Vishal, has again asked, how can the LSP ID be raised?
Well, Vishal, if you want, I mean, there's a full flow on how this is done. Just reach out and we'll send you the material on how to use it. I think I posted the email address. It's fs@ondc.org. Just write to us, we'll send you all the material.
I think Shiva has asked any failure rates in the pilot, which Rishi has just answered.
Right.
Is AA entity permitted to enter into an arrangement with a TSP? We just answered that, right? A TSP akin to LSP, and what are the different roles that they play? Can a LSP function for multiple FIs, something like an app for multiple loan vendors?
Sorry, what is that?
Can a LSP function for multiple FIs, something like an app for multiple loan vendors?
Yeah, but that is the exact design.
But when one side the question says FIs and then it says loan vendors. So either it would be FIs or, so are you talking of aggregator sort of a model or a LSP model per se?
I think by FIs, they just mean financial institutions.
No, so let me clarify for what it's worth. The entire concept, at least at ONDC, is when the buyer app or LSP comes on board, if we have 5 lenders or 10 lenders on board, when the lead is generated, it is sent to all participating lenders for that particular product, without exception. Like there's no cherry picking, no nothing. So the design is to give as much choice to the buyer and access to markets to the lenders. So the whole design is that marketplace model.
Okay. So what has changed in current flow versus previous flow? Earlier also LSP was not able to get the data. I'm not quite sure what this question means. I think the entire presentation has been about the change that account aggregator is going to get into.
No, I know. So if I understand this correctly, if you're looking for data, whoever asked that question become a regulated entity. Otherwise, you're not getting any data.
Right. Okay. Yes. Can there be a commercial relationship between AA and LSP without which responsibilities, liabilities cannot be established?
No, we just answered this question in the presentation, given that these relationships are just starting up. There is nothing which is stopping the LSP and the AA to get into a commercial arrangement with each other. But right now, we've not seen any such arrangements coming up. But as we move forward, we may see market participants, coming up with unique business models. And we may see such arrangements also coming up.
Okay. AA TSPs who have successfully implemented the multi-lender flow, can we get some examples? And also to reiterate, the data will be shared with the RE, but the RE can choose to share this ahead with the LSP for underwriting. So it's a question. Can
That's
the
between
RE
the
choose
RE to, that's on the RE to decide, right? So there's again outside the scope of the AA framework, it's the decision of the RE on whom they choose to work with as a TSP or in whatever relationship. Like we said earlier, it has to be governed by your outsourcing guidelines and your, the say of your compliance team on such arrangements. We will have nothing to comment on it. What was the first part of the question, Ruchi?
It says AA stroke TSPs who have successfully implemented this multi-lender.
That I think Rishi has already mentioned.
Can we give some examples?
You're looking for LSP examples?
Yeah, AA and LSPs. Yeah.
EasyPay, FinView, OneMoney. OneMoney is still to go live. Paisa Bazaar, FinView. So they are still to go live, but they're in the last few days of QA. Tata Digital, Pay Nearby, Clinic 360, India Lens, Invoice Pay. I mean, that 10, 12, just look at our website in the deck, go to slide 12, all the names are there.
Okay. And we will share, we'll put up the PPT on our blog, the PPT and the presentation both. So in the next 1 or 2 days. Could you please explain the multi-lender consent?
So, I mean, it's pretty straightforward, yeah. So if there are 5 lenders on the network, each have, they want 6 months of bank statement data for ease of explanation. Instead of sending one OTP to each lender, you give one OTP everyone is consented to. Does that answer your question?
No, in fact, Rishi, what will happen is at the time of consent, anyhow, there is no OTP. So I think the question is that on a single screen, you can display the consent of all 6 lenders and the customer with a single tap can actually enable consent. The only thing you need to do is from a UI perspective, you need to ensure that there is an option of selecting or deselecting any of the lenders given to the customer. And that's what Abhishek has displayed also during his PPT. So there is no OTP at the time of consent itself. It is only about how you show the consent in one screen from multiple lenders. And like there are a few ways who already have a multi-lender consent flow screen enabled, and we can just reach out to them for more demos.
In this flow, is VUA optional? Multi-VUA possible? Is it decided upfront before creating consent handle?
I don't understand this question.
VUA, virtual.
Sorry, what is the question?
I'm just looking up the question. See, multiple VOAs can't exist in a session. At the end of the day, VOA is an identification of the end customer, and multiple VOAs can't exist in the same session. So once the A session opens up, you will need to have a single VOA. You can choose not to pass the VOA, but then how does the A know what the consent is? So you can choose that you don't pass the VUA in the redirection, you allow the customer to choose themselves, but that's a decision that most people don't take because it
No, are you
makes the
asking
overall
us a
journey.
question or are you describing how it should be?
Rishi, I'm trying to answer the question.
Oh, okay.
Yeah. So most people don't. So VUA is an optional parameter. You can choose to pass it, you can choose not to pass it, but multiple VUAs can't exist in the same AA session.
Okay, Rahul, you have raised your hand. You can unmute yourself to ask the question.
Hi,
Rahul.
Hrushikesh, this question is to you.
Yeah.
What kind of documents can be exchanged from LSP to a FIU to a AA mode, actually, in this case? What kind of documents?
No. I mean, there's no documentation here. So,
No,
like,
no, in terms of data. Sorry, wrong terminology. What kind of data can be
no,
exchanged?
so I would defer to Sahamati. Like, so I mean, I know there's bank statements, there's GST data, and there's SEBI regulated depository data. But beyond that, Sahamati.
There are 15 financial types that are already enabled on AA today, and all of that can be made operational through the arrangement. Even with the LSP, that doesn't change anything because, at the end of it, the entire interaction and data sharing is happening between the AA and the FIU, from the FIP to the FIU via the AA.
Okay.
So there are 15.
One more.
Yeah.
Okay,
Yeah.
one more top-up question. So once assuming by using the AA framework, the one of the borrower gets a loan from one of the FIU, and tomorrow post disbursement there are certain compliances like a stock statement or any other documents. Can that also be exchanged through an AA mode, or how does that? It's like a bilateral between
I
FIU.
don't think those are enabled currently.
No enabled.
You're talking about a recurring consent, Rahul, where you want to
No,
monitor.
Shalini is saying stock statements of inventory and all. Where are you going
Like
to get that?
OD and you require it, so that is not
Yeah.
there. So it is not
That is
from
not.
our. See, the data type which are available are from the regulated entities. So stock is very personal to that individual or a corporate. So that
Okay.
that rails are not there. It is between just regulated entities.
Got it. Okay. Thank you.
You can refer to our website for under the resources section. You can go through the technical resources. You will see links to Rabbit website where the various data types are mentioned. And also the presentation that Abhishek showed also has data types, which we'll upload it onto a blog. So once it's up there, you can check.
Okay. Thank you.
All right.
So, Ruchi, when is the next session starting? I think we'll also need to.
We'll just take one last question because
sure.
it's been there for some time. Will RBI be okay with AAs integrating with LSPs, given that such an arrangement will enable AAs to receive a consideration for activities that may not be business of account aggregator as per AA master directions?
I mean, under what situation are we asking this question?
No, but I mean, what is the basis of saying that it is actually not a business of account aggregator? What they're doing is activating a consent management interface for a FIU to basically reach to their customers via a channel or a marketplace. So at the end of it, it's an extension of what they're offering to the FIU, right? So by that logic, there should not be any reason or rationale of not treating it as a business of account aggregator. Because we all understand that all lending and all financial services are now moving to the point of sales. And hence, this facility has to be available at the point of sales. What RBI will obviously look for is that it is not compromising any of the basic principles on which account aggregator has been built, which is that it should be a data plane entity and ensure complete security of the customer with a proper consent being taken in. And that will be taken care of in the current flow. So we don't see any reason of RBI not with it.
Corporate office.
Yeah, Rahul?
I think you were saying something else. Okay, so I think more or less the other questions are already answered in the presentation and through our discussions. To everybody else who has any more questions, please write to us at info@sahamati.org.in. Rishi has also shared his email ID, so please feel free to get in touch with the team. And I think we've been able to sufficiently cover the topic and sufficiently answer all the questions, which is a very rare thing in most of our online sessions. So thank you very much for sitting through this explainer session. And thank you once again, Rishi, for your time and taking the effort to answer all these questions so descriptively. Thanks a lot.
Thank you. Thanks all.
Yeah. Thank you, Shalini. Thank you, Abhishek. We move on to the next section of our Pragati session. I would request everybody to, stop their video. So we move on to the next section, which is the TSP Spotlight section. As always, I would say why is it that we have TSP Spotlight? Because most of these explainer sessions are on the theory and discussions around how a particular participant can be a part of the ecosystem, or how a particular FI type can be a part, or how a particular use case can be, helpful for an industry. A TSP Spotlight session actually is one where we technology service providers who are actually who help in implementation with the FIUs can actually say how what we discussed can actually be moving into reality. So it's like a call to action of the explainer session. As always, we have two TSPs who would like to showcase their solution. The first TSP we'll start with is Boost.Money. Prashant, would you like to open your put on your video and come onto the screen? Yes. Yeah. Hi,
Yeah.
Prashant.
Yeah.
So Prashant is the founder of Boost.Money, as you can clearly see, the marketing that he's doing on the screen right now. So he will take us through some data analytics, data science capabilities that they have created on information that comes through Account Aggregator. So over to you, Prashant. We have the next 30 minutes for your demonstration and any questions and answers that may possibly.
Yeah, thanks a lot, Ruchi and the Sahamati team. Welcome the entire ecosystem. Pleasure to be back. The journey that we started almost 6 years ago, great to see where we are with the ecosystem today. This is from the entire Boost.Money team, what I'm going to show you today. We've been working very hard on this platform for last 1+ year, and we have just gone live. It's pleasure to be here today to have the opportunity to present Boost.Money. So I'm just going to share my screen here, and we'll just get started. All right, so I'm hoping that just a sec. I'll just move this a little bit. Okay, so I'm hoping that this is all visible. My screen is visible. Ruchi, just let me know in case it is not.
Yes,
Yeah?
Prashant, it is visible.
All right, thanks. So Boost is essentially an AI platform for better lending decisions. When we first started our journey, we were essentially looking at the credit divide in India, where you have consumers who have decent credit scores, and then the majority of India where they suffer with either no credit score or a substandard credit score. So we essentially took that problem and went very, very deep into that. But as we started on that journey, the platform continued to evolve. And today I'm going to present to you the Boost AI platform, which is available to all the stakeholders in the ecosystem via an API, SDK, as well as a very, very simple and intuitive user experience flow. So I'm going to take you through that journey today. So as I mentioned, we are focusing initially on the credit score as a metric, but the platform supports all account aggregator data sets, as well as all kinds of financial data sets which exist in India today. But yes, to start with, we are definitely laser focus on this entire segment of consumers that you guys are all addressing, whether you are an NBFC, a bank, or an LSP, when you are servicing a credit card or a loan to any of your consumers. That is where the Boost.Money platform could be very, very handy in essentially addressing that. So we are essentially a full stack account aggregator solution. We connect to account aggregator platforms. We are an RBI CISA audited platform, certified platform. We are also a certified FIU TSP. In fact, recently, we were, quite proud to say, for our team, we made it to the Google North America AI First Finals, as well as we are working very closely with NPCI. We are part of the NPCI Propel cohort. Our solution is as flexible as it gets. You could connect with our API on cloud, which is completely run from India, or if you want our solution to be completely on your premise, that can be done. We provide you a single integration with the credit bureau APIs, as well as the entire account aggregator data capabilities, essentially. So as I said, the platform is exposed via APIs, SDK, as well as the UI, which I'm going to demo in a little while. Here's a sample of the instant real-time reporting capabilities. What you see here is a sample Boost report, which is generated in a few seconds from our platform. I will show you in the demo, how that is generated. We first pull your credit information report data electronically via bureau partner. We then essentially pull the bank transaction data via account aggregator partner. And then our AI makes sense of everything. It looks at all the open credit lines. It correlates all those credit lines with your bank transaction data. It does a very, very deep transaction analysis. And then finally, we also generate a transaction score. And I'm proud to say that we have done thorough benchmarking with a leading credit bureau. So the actual transaction score is where we have partnered with Experian to do that complete benchmarking on scoring a consumer just purely based on their bank transaction data. Even if they do not have a credit score, now you do have a score. Now, we are also announcing the first financial generative AI interface on all possible financial data sets, both on the consumer side, but more so for the entire audience on the call today. So if you are a regulated entity, if you're a loan manager, if you're a data analyst working with that regulated entity, I will take you through an interface where you can log in, you can use generative AI to ask all kind of questions on your applicants as well. We support ingestion of all financial documents and all AA data sets via all the modes: account aggregator, documents, bureau API. We are also integrated with Gmail API. So, if even that kind of support is needed, that is also there. And we are a certified Google Gmail integrated platform. And a snapshot of correlation. This is big because the time that we have spent in the industry working with our customers and for all kinds of credit decisioning, sometimes you want to, you can see that, okay, here is a credit line in your credit report, but you really want to correlate it. So our correlation engine correlates that with all kinds of transaction data sets, whether it's your card or bureau credit line, correlating with your bank transactions, account aggregator transactions, or even for SMB, small and medium businesses or sole proprietors, correlating your GST data with your AA transactions and other financial data sets. This is a new offering which is just in beta right now, which we call a pre-approval score, which is big for issuance use cases, super fast, whether you are running a credit line on UPI or whether you are issuing a credit card and you want that real-time decisioning, which is based on the amount. So, so for example, you could be a farmer in a village, or you could be a tier 2, tier 3 city worker, and you might just be looking for an approval, a credit line approval, or a RuPay credit card approval for 10, like 1,000 rupees or 1,500 rupees. The Boost AI platform will analyze all those key data sets to give you an approval score. Yeah. So feel free to reach out to me at Prashant@Boost.Money, sales@Boost.Money. You can, in fact, we are now live. You can go ahead. You can create a sandbox account, from our website and start the journey as well. So I'm just going to take you through. Once you have come in and created an account, so you are all welcome to just come in and create a test account. So this is what you see is a regulated entity flow, right? Because we partner with FIUs and regulated entities to enable all these use cases essentially. So I'm essentially showing you that if you are tech savvy enough, then you can integrate directly with our API or use our SDK. And in fact, I will shortly show you our SDK demo. But entire documentation on the API integration, if you want a tight integration, that entire documentation is available here. If you just want to basically, just look at our SDK integration, you can look at that as well. If you want to just try our sandbox environment, just a sec. I'm just gonna log in again. Hold on. And just a sec. I'll just log in a second. Okay, I'm just sharing my screen again. Apologies for that. So we'll just go back here and log in. And we're back here. So if you just want to try our sandbox environment, you can do that as well. So here is where you could test the SDK flow in terms of how the SDK itself works. You can also manually add any user, and you could basically go in, upload multiple credit reports. So like, for example, these are assisted flows. You might be a DSA with an NBFC in a village, and you're carrying a tablet. You carry this Boost environment with you, and you could upload any kind of credit bureau report as well. And then you could even upload a physical bank statement and essentially get going with that. And the platform will essentially analyze all that, and we will generate a Boost report in real time, essentially. So you can play around with the sandbox as you would wish. I'm just going to today show you our production environment right here. So here is Ankur, for whom we have actually gone through uploading a credit report as well as completing an account aggregator flow as well. But in the interest of time, what I'm going to show you now is how an actual demo will look like. Yeah, so we will just, I'm just gonna start this flow here. So once you come in, you can essentially add a user, and you could. So this is a manual flow where you are uploading a credit report for a particular consumer, and now you are uploading a bank statement for a particular consumer, and in few seconds you essentially get the Boost report generated. I'll just now show you an SDK flow which is a completely automated flow where there is no intervention from your side. It can be integrated in an LSP flow or the bank flow or the NBFC flow. So let's just go through this. So here the consumer is essentially on their own because the consumer is now going to provide that consent. So the consumer is logging in with their mobile number, which is linked with the credit bureaus. So you essentially first get your OTP, you enter that, you give that consent. So the first step here really is that fetching your bureau score. And in the background, all the bureau data has already come into our TSP environment. In that sequence, as you can see in few seconds, now you are adding your bank account essentially. And OneMoney here is our account aggregator partner. You select that particular savings account and you proceed. And now you have essentially given the consent. So in few seconds, the bureau data as well as the account aggregator data is all moving through our platform, and our AI is actually correlating all that data, making sense of all that data, and it is done in just in few seconds. I'll just show you that what is generated by that, right? So here is essentially a Boost correlation report. So what you just saw in few seconds, whether it is multiple bank accounts or whether it is the bureau itself, you basically get this integrated collective score and insights report, where our platform is analyzing that what is going on with the bureau data itself, what is going on with the credit lines, and then you get the transaction score for all the multiple accounts in terms of the data which is coming from the account aggregator platform itself. You get account-wise analysis in terms of, so this is all done by an ML engine in real time, understanding, and I'll show you a sample Excel file as well, which is supplemented with this very detailed report. We make it very, very easy for you to consume all the credit line information, as well as now you can correlate it. So for example, this is an Axis Bank credit card, and if you want to just correlate this, you just want to, you just click on this, and you can correlate the demographic details of the customer, or you could also correlate the bank transaction data, right? So for this particular Axis Bank credit card, these were all the related account aggregator transactions essentially, right? So this is how the correlation engine essentially works. In the interest of time, I'm just gonna very quickly show you a detailed transaction analysis report as well. So this is the report which supplements that, where you basically, for any AA data, you get a completely categorized view which comes out of our AI engine. All the level 1 categories, the level 2 categories, the mode of the transaction, as well as if there is any party involved essentially. So this all this intelligence actually makes its way to that Boost report that you just saw. So now we will just spend some time on the SMB side of analysis. So I'm just going to play another demo here. So for example, if you have a small and medium business or a sole proprietor customer which you want to evaluate, and you have a current account data. So as far as account aggregator is concerned, we are already integrated in the SDK environment right now, in the UAT environment, but on the AA side also we are going to go live very shortly. But as of now, this is entirely supported for bank statements as well as your GST statements. So this is, for example, so we just saw that there was a current account statement, and here is a GST ledger of the invoice data itself. So if you then go through that flow again, you could basically just select, what was that particular bank, select that current account statement, and then you can go in and then upload that GST form, the data itself. And then you are essentially ready with the complete correlation report. The correlation report will look something like this. Just a sec. So we are right here. Yeah, so I'm just going to click on this. So as you can see, here are some of those input invoices, which were picked by our correlation engine from the GST forms itself. And that has all been completely correlated with the bank transaction data, which is coming from account aggregator. Yeah, so this is these are the different vendors and their invoices correlated with when was actual transaction done with the actual amounts as well. Finally, I would love to, I'm pretty excited about this feature, which we call the Boost Generative AI technology. So essentially, for any of your consumers, you could basically, for example, Ankur is your customer. You could essentially because reporting can only do so much, right? Reporting provides you all those capabilities, but you can only do so much. So that's where we provide you a Boost Generative AI interface for your consumers to ask all kinds of financial data related questions. So I'm just going to play our generative AI demo here in terms of, how that works. So for example, we are back in here. And you could basically ask a question that I want to list all the credit lines for this particular customer, right? So if you just ask that question, Boost AI in the backend is essentially sort of looking at all that and says that this particular user has credit lines with Axis, HDFC, and so on, right? You can then ask a question, how are the loan repayments looking for, right? For example, for this particular customer. And Boost AI will answer and will give you, those specific answers. Yeah, so right here, based on that particular date, this was a particular loan repayment which was made, and so on. So Boost AI allows you to go really specific in terms of the data science capabilities, in terms of understanding any of your customers. And I'll just end with this, give me expense to income ratios of each month, for this particular user. And the AI should just give you an answer momentarily. Yeah, so it has given a very, very detailed answer with all that. So with that, I would like to pause here and open up for any questions. So thanks again, everyone, for the opportunity, and I'll just open up for questions. I'll stop sharing. Yeah, let's just get all the credit scores for this customer. Yeah, so the user has a credit score of 8, and from this particular bureau, and so on. All right, so I'll just pause here and now take questions. Thank you.
So if anyone has any questions, you all can write in the Q&A or raise your hand. And okay. Prashant, it would be good if you leave your email ID and website address in the chat box.
Yes.
If anybody wants to get in touch with you, okay.
Yes. So I'm just posting that. Yeah. Thank you all. Yeah.
All right. I don't think there are any questions right now for you, Prashant. I'm sure people will get in touch with you if they
Sure.
have any queries around your solutions. All right. Thanks a lot, Prashant, for your time.
Thank you.
I hope this was helpful for everybody who's attending. We move on now to the second session for today, the second TSP Spotlight session. I would like to invite Sivagar Bhaskaran from Setu. He is the solutions manager in Setu TSP. For those who have been in the know-how of AA industry would know that the AA ecosystem would know that Setu is one of the earlier technology service providers of active in the account aggregator industry and well versed with how the entire framework functions. Okay, so could you please put on your video, Bhaskaran? Could you please put on your video? Thank you. Okay, so I think we're pretty much moving on time. Thanks for joining us, and I will hand over the mic to you now, please. The next 30 minutes is on to you.
Thank you, Ruchi, for your time. Just a minute, let me get my screen sharing set up and then we can get started with today's presentation. Yeah. Cool. I hope I'm audible, Ruchi. If you could please confirm that and my screen is visible, I can get started with the presentation.
Visible both.
All right, perfect. Thank you. So good evening, everyone.
Bhaskaran, just one. There's someone, there's Dhruv who has raised his hand. Dhruv, can we take the question? We'll take up your question at the end of Setu's presentation as well. Thank you. Yeah, please continue.
Sure. Thank you, Ruchi. Right. So good evening, everyone. Thank you for your time. My name is Sivagar Bhaskaran, and I handle solutioning at Setu for all things data from the account aggregator to insights as well. Before starting, yes, I'd like to give a quick word of thanks to the Sahamati team for setting up this informative webinar and to the attendees present on the call as well. In today's presentation, I will be presenting a brief overview of the following conversation topics, where we will be talking about LSPs and their roles in the account aggregator framework in present times. We will then be touching upon Setu's engagement with Federal Bank and their LSP partners for lending and credit card flows with our ongoing engagement. And then we would try to understand the problem statement and the solutions we delivered to resolve these challenges that we have identified as well. Now, Setu is a TSP, and we have a licensed account aggregator associate entity as well. With the AA ecosystem, we work with various banks, NBFCs, brokers, and insurance authorities as well. And if I were to reduce the fluff just a bit, let's talk about our TSP layer, or as we at Setu call it, Setu's account aggregator gateway as well. The reason why we refer to our TSP layer as an AA gateway can be extrapolated from some of the benefits that we offer, wherein to manage multiple LSPs for any single FIU or a lender, let's say, for example, a unified solution is ideally required to handle your overheads. With our AA gateway, we offer AA routing that offers redundancy and a uniform experience in terms of dashboards and consent flows as well. And this allows for error handling to be streamlined much vastly, which offers maximized FIP availability and various other functionalities as seen on screen here. Now, more than ever before, today we are seeing an increase in the number of loans and credit cards that are dispersed via LSPs as well. A sample understanding of this is our focus on today's call, where we'll be presenting our engagement with Federal Bank and its partners such as FI, Scapia, and OneCard as well. Now, considering this, at the same time, there's increased oversight on the way these loans are also managed. The Digital Lending Guidelines, or DLG, issued by RBI was the first stepping stone to bridge this oversight. And some of the key highlights that we've derived from the DLG guidelines are with regards to the evaluation of, let's say, borrower creditworthiness as well, where we've understood that, hey, regulated entities should capture the economic profile of your borrowers before extending any loan over their digital lending applications or DLAs in that sense through these LSPs as well. The cooling off period for your loans, during which a borrower should not be charged any penalty or would, let's say, try to reapply for loan, should be clearly defined. The process for loan dispersal as well with regards to loan servicing, repayment, and various other factors should be executed by the borrower directly. And this means that you cannot leverage any pass-through account or any pooling account of any third party involved in this engagement. With regards to data handling, lastly, as a point as well, the regulated entity should also ensure that, hey, the collection of any data by your digital lending applications or the LSPs in that sense is purely need-based only. And this is only done with prior and explicit consent of the borrower, ensuring that, yes, an audit trail has to be present. Now, diving a bit deeper into the hurdles that the AA framework presently faces in powering lending via LSPs. Now, with regards to management of multiple LSPs, as I highlighted previously, running, tracking, and managing multiple consent data flows under a single roof is a paramount requirement. Following up on my previous point, complexities in regulations for data storage between entities is tedious when we consider, let's say, your lending and regulatory policies that are accountable for. With a lack of integrations in passing data from your business rule engines to your loan origination system, a fractured system thus can lead to delayed and manual dispersals that often occurs nowadays. And of course, with underwriting comes the need for assessing the creditworthiness of your borrowers and addressing unique challenges such as the duplication with applications of loans and credit cards with various LSPs for any single lender. Let's take a real-time example here. This means that any lender with multiple LSPs would have to individually manage the operations of each LSP with no unified view and a difficulty in established data sharing as well. When we talk about the lack of a BR integration powered by real-time insights and the inability to underwrite with accurate fraud detection, you start to run the risk of poor underwriting for your borrowers. Now, with all this doom and gloom aside, let's start to talk about how Setu can actually resolve some of these challenges as well. With our dashboard that we fondly refer to as the bridge, you can manage multiple entities through a single unified view, which we will be demonstrating as well. This allows for you to derive key data insights and handle data sharing with the LSPs if mutually agreed upon. With direct data integration to your BREs, you can now pass these insights to perform accurate loan and credit card underwriting. And by leveraging deduplication caches supported by our ability in fraud detection, you can reduce the overall risk of fraud in underwriting and also reduce the hits to credit bureau scores for the borrower's profile as well. Now, I've probably been throwing a lot of jargon as of now, so let's start to take a look at our dashboard with like a proper product presentation as well. With our dashboard at the bridge, as I previously referred to it, you can manage multiple LSPs and their individual use cases from a single unified console. With the ability to configure individual use cases and design languages, our dashboard thus allows you to track consent requests and approvals across all of your LSPs in a single view. Loan service providers can then view their own performance in consent request conversions and approval metrics with the help of our user management suite. I think it's best that we start looking at the demonstration with a deeper dive as well. Now, I hope my screen is hopefully refreshed as well to the product view. Our dashboard is a one-stop shop that allows you to manage multiple FIUs and their associated partners as well. Creation of these FIUs is as easy as me clicking on the create set up another FIU button. And now on screen, we can see that all I would have to enter is my organization name and enter additional parameters such as PAN and GST number as well. For this demonstration, what I have done is I have set up a dummy entity by the name of loan service provider. And here, let's take a quick look at what lies under the hood in this case. On clicking on loan service provider from here, we can understand that I'm trying to draw certain parallels from our engagement with federal banks specifically. And I've created three LSPs in this case. Just for demonstration purposes, let's call them LSP 1, 2, and 3. Now, if I were to open up LSP 1 here, for example, I would then be taken to a detailed configuration screen that allows the authorized user at this point to configure the unique design themes that are present for them, and then the use case specific language that meets the needs of their organization or the lender as well in this case. Now, configuration is quick. Once I open up adding configuration details and quickly click on edit here, we can then see the ease of configuration capabilities that are offered to the authorized users present by use cases, let's say, for example, as well. If I were to scroll on in this screen as well, we can see that, hey, you can customize the UI for each of these LSPs as necessary by adding logos as necessary, changing your colors as necessary, any specific font libraries that you wish to use. All of these can be modified as well. And yes, of course, consent details can be individually defined for each LSP as well, meaning that every lender that works with multiple LSPs can define consent use cases at a granular level from that point as well. Now, right now I've been showing a sample use case of how this would look for Money, say, for example. Let's change my tab here and open this up to, let's say, a different LSP, where in this case, we can see that the configurations here are different for another use case specific to this partner. And this has been simplified in terms of management with our dashboard as well. Of course, with managing multiple loan service providers, it is important to understand that reporting plays a key role here in understanding the importance and the performance of your providers as well with consent conversions. Now, our dashboard offers a unified reporting view as well, and this can be segregated into your various partners for any FIU, or you can filter this out to view a specific provider, as you can see from here by clicking on select product app, say, for example. Now, if I were to have implemented this with let's say one card, let's say Scapia, I can view analytics for all of these LSPs at a single glance, or I can say, for example, just specifically understand how FI is performing today as well. With our consent conversion funnel, you can extrapolate and understand the performance of your current consent journeys at a stage-by-stage level. And on scrolling down, we get to see more information, such as your consent request statuses, consent trends, say, for example, and then reasons by which users might have dropped off from your funnels by identifying them at a pending stage or at a rejected stage as well. Now, of course, yes, if you wish to extract this data, leverage spreadsheet tools such as Excel or Sheets, we've got you covered. Users can download reports as per their preferred date range. If not, you can have these mailed to a secure email address of your choice as well. Now, access to the dashboard is entirely user-defined, as we can see on my screen right now. What this means is that any FIU can define a master admin for their organization and more, and then can invite additional users to represent or configure their loan provider entity as well. These users can also be restricted in their roles by administrator access, or say, for example, a basic pure view only basis if necessary as well. Coming back to our presentation, let's talk about how consent guidelines are established and handled by Setu as well. While the consent from the customer must be given to the lender itself, it should be noted that request triggering and redirections must take place on the loan service provider's digital application itself. It's here that Setu enables secure consent triggering without accessing the FIU's credentials. It should be noted that consents can be given at a marketplace lending style scenario or a one-to-one lending scenario as well. And for this, we can also take a look at a demonstration for the same as well. So right now I have hopefully shared my screen to showcase a scenario of how marketplace lending would look like in this case. Where, say, for example, I would be logging into Setu's account aggregator. By clicking on the login button here, I would have received an OTP for my registered mobile number. I click on login from here as well. And then on clicking login, I would then be prompted to share that, hey, can you select which bank accounts you would wish to share as well? And you might notice that it's already pre-selected some of the accounts that has been tied to my mobile number as well. Setu offers these smart nudges with features such as auto discovery, which I will be touching upon shortly, and various other features that we deliver to our partners to ensure that we reduce the friction for these borrowers in terms of improving the consent conversion flows as well. Now, once I've selected, since my account's already pre-selected, I would then be fetching these accounts linked to my mobile number. And then on selecting my account with Axis Bank, I would then be performing an account verification, which has already been done in the past. On continuing to the approval, since this is a marketplace lending scenario, we would primarily be prompted stating that, hey, in order for us to approve data sharing, we'd like to inform these borrowers as well. Why are you sharing your data? For which duration are you sharing your data for? And what account types are we requesting as well? As we previously saw on our dashboard, which we called as Bridge, all of this is entirely configurable, which allows for users to have a low-code, no-code platform that offers vast configurations for consent journeys as well. Let's say I've gone with the success path. I'm saying that, hey, you know what? I'd like to select the lenders that with whom I'd like to share my data. Since I've seen that, hey, there are 7 lenders I'd like to share my data with, in this case, for this loan journey, I can then approve my data sharing with this flow and then wrap it up from this point. Now, what I was showing while in the scenario of a marketplace scenario was with multiple lenders, but let's take more of a realistic scenario with a one-to-one journey as well. Now, presently on my screen, I am showing a sample implementation of what we are working with FiMoney specifically for, wherein which now, similar to how we previously engaged with the account aggregator journey, I would then be entering my OTP here, clicking on login from here, and now I can actually show a much deeper dive into some of these smart features that we have. Now, clicking on once I've entered my mobile number, in this case, auto discovery has been enabled that allows for us to fetch the accounts that are tied to this mobile number as well. Meaning that Sivaga, if he as a borrower were to go into this journey, would not have to scroll through various banks that offer accounts, select his account with those banks, and then select them for this journey as well. Not necessarily. Those accounts are listed for him. And we do also offer, let's say, automatic selection of all of these accounts to reduce the friction for your borrowers as well. Now, since these accounts are already selected, I would click on verify accounts from here. And then at this point, this is where Setu's sequential OTPs come into play as well. By what that means is, let's say, for example, any bank account that we wish to tie for the journey in this case as well, right? Now, I have a single account with Axis Bank and I have multiple accounts with ICICI Bank as well. This means that I only require a single OTP for every bank in this case, or every lender. So I would require one OTP for Axis Bank, yes, but with ICICI Bank, as we can see, there's a savings account and a current account. It's not required for us to verify both of these accounts. One OTP will actually validate both of these accounts as well. From this point onwards, the journey kind of continues the same way that we saw in the marketplace journey as well. In the interest of time, I'll skip this and walk back into our presentation from here. Right, let's see, share this. Cool. Now that the borrower has completed the consent conversion journey and shared data, what happens next? This is where Setu's insight fits into your workflow for underwriting. We analyze the data shared by the borrowers, leveraging features such as AI categorization engines, income analysis, performing fraud checks, as per the expectations set by the lender itself. You can build insights as per your use case. This means that you can leverage the insights we derive from the shared data for your credit risk team to perform manual loan dispersal or even perform real-time dispersal via your business rule engine as well. Of course, with us completing a happy path of loan dispersals comes a troublesome event for every lender, which is with loan repayment monitoring as well. You need not worry in this case, since we also offer what we call as ideal e-natch dates, where we recommend payment dates for your borrowers based on our analysis of their financial profile. We can also offer insights as per the lender's policy or the preferences of the loan service provider as well. This means that a high-risk LSP can have different consent parameters and insights to be picked up on underwriting. And as we've seen on Bridge, each loan service provider can have a unique use case of their own as well. Now, once the data has been fetched by Setu, and this is where we start talking and delving more into our engagement with Federal Bank as well. We can then send this data to the lender bank for record keeping if necessary, or to the loan service provider based on any mutual agreement between the loan service provider and the lender as well. And with our auto fetch capabilities, this means that data generated with the ready status can be automatically fetched rather than conventional manual means, which reduces your operational overheads as well. We then push this data to our insights platform, which performs validation as necessary. And with failures in validation, said customers are then rejected from the flow. Whereas in the scenario of, let's say, a success path, we feed the process insights to the business rule engine by integrations, which brings us to our next slide. In our engagement with Federal Bank, we work with Lentra, their business rule engine, which is fed insights that we generate from analyzing the data shared by the borrower. The loan terms are then passed to us, allowing for us to update the deduplication cache with the loan decision shared by the business rule engine. By leveraging Federal Bank's personal loan and credit card API, or the PLCC API to keep it short, we can then check for the offer limits that can be shared with the borrower, allowing for us to send the loan offer to the loan service provider itself. At this point, the borrower has the path of accepting the shared loan offer, allowing for the lender to disperse the loan in a mechanism of their preference. However, should the borrower drop off from this point in the journey and return in future for the same flow, we check in with the deduplication cache with non-PII data to ensure that credit bureau scores and the account aggregator is not hit, which minimizes costs and reduces the overall flow time as well. This would then bring us to an end of the flow for loans and credit card underwriting for LSPs on the account aggregator, with a specific example that I had presented for Federal Bank. Of course, now why would this model benefit regulated entities in any way? As I highlighted previously, data is automatically fetched post-consent, reducing manual operations. With our bundle solution of Setu Insights and Business Rule Engine integrations, you create a streamlined flow for underwriting conversions as well. And then with regards to data sharing, lenders can choose to consume data that they explicitly require or share with loan service provider as per their internal policies as well. Of course, yes, this is done with prior consent. And for the loan service providers, you can work with single or multiple entities seamlessly with our Bridge dashboard that we presented. And we thus empower you to manage multiple design themes and tweak consent flow languages and use cases as per your preference as well. As a bonus, we can also share notifications of all key events from the point of loan offer generation to the happy and success paths, such as your rejection or dispersal as well. Thanks, folks, for your time and patience. I hope I've been able to highlight the role that LSPs are playing in the present AA ecosystem and how Setu has been resolving these challenges as well. I'd like to wrap up from this point onwards. And since we have a couple of minutes, I think we can open the floor for questions. Thank you.
Thanks, Bhaskaran. Maybe you could leave a link for your FAQ section that you mentioned.
Sure, Ruchi. I will be sharing our email addresses and we can have any questions routed to that email ID. Yes.
Just wait for a couple of minutes and then. Anybody has any questions, or you can put it down in the Q&A section in the chat box or raise your hand. Okay. I think Bhaskaran, people would prefer to get in touch with you directly. I
No
don't see
worries. It's
any
been a long call.
questions.
Yeah.
I don't see any questions and any hands also raised. So thank you so much for this presentation, and that brings us to the end of this Pragati session. It was a very focused discussion today. Hope it was helpful for all those who took the time off and attended this session. Like always, we will be putting up a blog in which we'll have a link to this presentation and the recording for today. Recording right from the explainer session, keynote explainer session to the TSP sessions. So with that, we come to the end. Thank you so much, everyone. We're a little about 6 minutes before time. So that's good. That's good for us. So thanks a lot, and please also reach out to Sahamati at info@sahamati.org.in if should you have any kind of questions, any kind of discussions, anything that needs a further deliberation. Please reach out to us on our email ID. Thank you very much.
Thanks a lot. Bye-bye.
Thank
Thank you, Ruchi.
you. Thank you. Thank you.